Well, one boat that's rising at the moment is Dropbox. It's up 15%. The numbers just hit. Deirdre Bosa's got them for us.
Well, that's right. Those shares are surging, and this comes after Dropbox beats the street's expectations on the top and bottom lines and announces a $600 million buyback. Q4 revenue slight beat at $446 million on adjusted earnings per share of 16 cents. That's a 2-cent beat. Let's take a look at paid users. This is a key metric as investors are looking for evidence that Dropbox can convert its large consumer following into paying enterprise customers. So looking at that, the company now has 14.3 million paid users. That's a net add of about 300,000, which is nearly double expectations. Average revenue per user, that's also coming in better than forecast at $125. Now, key, and we don't have this information yet, so this could really determine where the stock continues to go, but it's going to be that forecast for the next quarter in the fiscal year. We do not get that until the earnings call, so we will certainly be watching out for that. We also wonder if Drew Houston, the CEO, will face questions on a report published earlier this month from short seller Spruce Capital that says perhaps he's taken his eye off the ball. But right now, investors are very pleased with these results. They're up more than 15%. Again, we'll be listening closely for that guidance. Back to you, Wilf and Sarah.
I wonder, Deirdre, if part of this move, 15%, is a short squeeze, as this had been a name that has really underperformed. I know you've been doing some work into how crowded that short position was getting.
Yeah, absolutely. Now, the short position has increased since November. It's not a hugely substantial one, but also should note that when that Spruce Point Capital came out, shares have actually risen. So it really remains to be seen whether the wider investor community agrees with some of the points brought up there. Certainly the numbers speak for themselves, and it was a good quarter so far. But again, I want to stress we do not have guidance. That is going to be critical and, could erase all of these strong gains that we see initially.
Dee, thanks so much for that. Dee, thanks so much for that. Sorry, I lost the link up for a moment there. Stephanie, clearly the revenue and EPS is only a fractional beat. I mean, if you've got a big short interest and you announce a $600 million buyback, that'll see the shares jump a little bit.
Yeah, about 6% of the shares outstanding were short. So not huge, but for this company and this market cap, yes.
I mean, if you look at the chart, basically since the IPO, it's been steady down.
Hasn't done anything, and that's because we have been waiting for them to convert the non-payers to the payers, and it's double what expectations were. So I think that validates the model. We still have to see what they're doing in gaining share in enterprise, but clearly this seems like things are going their way. Remember, they had a sales reorganization. That might be also starting to work. So not a super cheap stock, not my kind of name, but I can see why the stock is up. They're making progress.